So let's get right into this, because if you or someone you care about receives Social Security benefits, whether that's regular Social Security, supplemental security income, or Social Security disability insurance, what we are about to cover could directly affect whether your payments continue without interruption, whether you face unexpected delays, and whether you find yourself scrambling to deal with paperwork at a time in your life when the last thing you need is more stress and more confusion. This is not background noise. This is not political commentary. This is a practical, real-world update that affects tens of millions of Americans starting right now in March 2026. And the people who understand it clearly are the people who are going to navigate it smoothly while everyone else is left frustrated, confused, and potentially facing gaps in their benefit payments. Let's begin with the foundation, because understanding why the IRS is requiring new forms helps everything else make sense. The relationship between the Internal Revenue Service and the Social Security Administration has always been deeply intertwined, even though many people think of them as entirely separate agencies operating in separate worlds. The truth is that your tax records, your earnings history, your filing status, and your reported income are all data points that flow between these two agencies in ways that directly affect your benefit eligibility, your benefit amounts, and increasingly, your compliance requirements as a recipient. For decades, this relationship operated largely in the background. Information was shared, records were cross-referenced, and most beneficiaries never had to think about it. But the system has changed. The compliance landscape has evolved, and March 2026 marks the point at which those changes become impossible to ignore. The core of what the IRS is now requiring centers on updated documentation and verification forms that Social Security recipients must complete or confirm in order to maintain what is called clean payment status. That phrase, clean payment status, is bureaucratic language for something very simple and very important. It means your payments are going in without flags, without holds, and without questions. The moment your account loses clean payment status, even temporarily, the consequences can be severe. Payments can be delayed. In some cases, payments can be paused entirely while a review is conducted. And for someone living on a fixed income where every single payment matters, a delay of even 2 or 3 weeks can create a cascade of financial problems. Missed rent, unpaid utilities, skipped medications that takes months to fully recover from. Now let's talk about each category of benefits separately, because the requirements differ slightly depending on which program you receive, and understanding the nuances of your specific situation is what allows you to take exactly the right action rather than a general, approximate one that may or may not fully protect your payments. For regular Social Security retirement benefits, the payments you receive based on your lifetime earnings record, and the contributions you made through payroll taxes over your working career, the new IRS form requirements relate primarily to income verification and tax withholding elections. Many Social Security retirement recipients also have other sources of income: a pension, withdrawals from a 401k or IRA, part-time earnings, investment income, rental income. The IRS has determined that the existing withholding and reporting forms on file for many beneficiaries are outdated, reflect income situations that have changed significantly, and in some cases contain errors that have been carried forward for years without correction. The new forms are designed to create a current, accurate snapshot of your total income picture, not to penalize you, not to reduce your benefits, but to ensure that the withholding and reporting attached to your Social Security payments reflects your actual situation in 2026, rather than a situation that may have existed 5 or 10 years ago when you first filed. For recipients of Supplemental Security Income, SSI, the requirements carry an additional layer of importance and urgency. SSI is a needs-based program, meaning it is specifically designed for people with limited income and limited resources, and eligibility is determined not just by age or disability status, but by a continuous assessment of financial circumstances. The IRS and SSA have historically conducted periodic reviews of SSI recipients to ensure continued eligibility, but those reviews have been inconsistent, sometimes years apart, and often reliant on self-reported information that was not always cross-referenced effectively against tax and financial records. The new forms being required starting this March represent a more systematic, more thorough approach to that verification process. What this means in practical terms is that if you receive SSI, you will be required to confirm current information about your income from all sources, your living situation, your household composition, and in some cases, your resources, including bank accounts and certain assets. If your circumstances have changed since you last reported, even if those changes feel minor to you, this is the moment to make sure the record is accurate, because discrepancies that come to light through the new process can trigger overpayment notices, benefit adjustments, or in serious cases, suspension of payments pending a formal review. For Social Security Disability Insurance recipients, those receiving SSDI, the new form requirements intersect with something that disability recipients are already familiar with: the ongoing obligation to report changes in work activity, medical condition, and income. SSDI is based on the concept of disability preventing substantial gainful activity, and the IRS and SSA together monitor whether that condition continues to be met. The new forms add a layer of financial verification to this ongoing review process, requiring SSDI recipients to provide updated information about any income received, including income that might not traditionally have been thought of as earnings, such as certain types of investment returns, settlements, or payments from family members that could potentially be classified as in-kind support. This is an area where many SSDI recipients are genuinely uncertain about their obligations, and that uncertainty is entirely understandable because the rules are genuinely complex. But the answer to that uncertainty is not to ignore the new requirements. It is to engage with them proactively, get the right information, and make sure your responses are accurate and complete. One of the things that makes this update particularly significant, and frankly, one of the things that makes it particularly stressful for many people, is the timeline. The IRS is not giving beneficiaries years to gradually adjust to these new requirements. March 2026 is not a heads up that changes are coming eventually. March 2026 is the implementation date, meaning the new forms are active, the requirements are in effect, and the clock on compliance is already running. Social Security beneficiaries who receive notice that they need to complete new forms should treat that notice with the same urgency they would treat a notice about a missed payment, not with panic, but with immediate focused attention and action. The notices themselves are arriving through multiple channels. Some beneficiaries are receiving physical letters at their mailing address on file with the SSA. Some are receiving notifications through their My Social Security online account. And if you haven't yet set up your My Social Security account at ssa.gov, doing so right now is one of the most important steps you can take, because it gives you direct, real-time access to your benefit information, your payment history, and any notices or actions required on your account. Some beneficiaries are also being reached through their appointed representatives or representative payees, individuals or organizations who manage benefits on behalf of people who are unable to do so themselves. And those representatives have their own updated compliance obligations under the new framework. It is absolutely critical to understand something here, and please listen to this carefully, because it is the detail that protects you from one of the most common and damaging mistakes people make in this situation. When you receive a notice about these new form requirements, verify independently that it is legitimate before you provide any personal information or take any financial action. Scammers are acutely aware of moments like this, moments when a real, widely publicized government change creates an environment of urgency and uncertainty. And they exploit those moments ruthlessly. A fraudulent letter, a fake phone call, a convincing-looking email that claims to be from the IRS or SSA, asking for your Social Security number, your bank account details, or a payment to process your new forms. These are scams, and they are already circulating. The real IRS will never call you and demand immediate payment. The real SSA will never email you and ask for your bank information. If you receive a communication that feels pressured, that demands immediate financial action, or that asks for sensitive information through an unofficial channel, stop. Call the SSA directly at their official number, 1-800-772-1213, or visit ssa.gov directly by typing it into your browser and verify what is actually required through those official channels before you do anything else. Now let's talk about what happens if you ignore these requirements or delay too long in responding. This is important to understand, not to frighten you, but to make sure the consequences are clear enough that action feels more compelling than inaction. If a beneficiary fails to respond to a form requirement notice within the specified time frame, the SSA has the authority to place a hold on benefit payments while the compliance issue is resolved. That hold does not mean your benefits have been terminated, it means they are suspended pending documentation. But practically speaking, for someone who depends on those payments to cover basic living expenses, a suspension feels exactly like a termination until it is resolved. Resolving it requires engaging with both the SSA and potentially the IRS, gathering the required documentation, submitting the correct forms, and waiting for the review process to be completed. That process can take weeks. In complex cases, it can take longer, and during that entire period, you are without the income you depend on. The most powerful thing you can do right now, today, not tomorrow, is take 3 specific actions. First, log into your My Social Security account at ssa.gov and check whether there are any notices or action items listed on your account dashboard. If there are, read them carefully and note any deadlines mentioned. Second, if you have received a physical letter from the SSA or IRS about new form requirements, call the official SSA helpline to confirm what exactly is needed and how to submit it, either online, by mail, or in person at your local Social Security office. Third, if you have a tax preparer, a financial advisor, or a benefits counselor who helps you manage your finances, contact them immediately and make sure they are aware of this update and can help you complete any required documentation accurately and on time. For seniors who are managing this process alone, without family support, without a financial advisor, without someone in their corner who understands these systems, organizations like the National Council on Aging, AARP's Benefits Help Desk, and local area agencies on aging offer free, knowledgeable assistance navigating exactly these kinds of situations. These organizations exist precisely for moments like this, and reaching out to them is not an admission of confusion or incapability. It is the smart, practical move that gets you connected to people whose entire job is to make sure you receive every dollar you are entitled to without unnecessary interruption or complication. The broader significance of what the IRS and SSA are doing here is worth acknowledging honestly. These changes are being framed as a modernization of the verification and compliance infrastructure, a long overdue updating of systems and processes that in some cases had not been meaningfully reformed in decades. Whether you find that framing reassuring or frustrating probably depends on your own experience with government bureaucracy and your level of confidence in large institutions to manage complex reforms without causing collateral harm to vulnerable people. Both reactions are valid. What matters practically, regardless of how you feel about the policy, is that the requirements are real, the timeline is active, and the consequences of non-compliance are significant enough that the right response is engagement. Informed, proactive, documented engagement. You have worked for these benefits. You have paid into these systems. You have earned every dollar that arrives in your account, and you have every right to continue receiving those payments without interruption. The new form requirements are not a threat to that right, but only if you respond to them correctly and on time. So take action today. Check your account. Read your notices, make your calls. And if this video has given you clarity and confidence about what to do next, share it with every senior in your life who needs to hear it. Because right now, in March 2026, being informed is the most valuable thing any of us can be. Hit that like button, subscribe to this channel so you never miss a critical update like this one, and drop a comment below letting us know your state and whether you have already received a notice, because your experience could help someone else who is watching and wondering whether this applies to them too.